Hello everybody, welcome to the Technical Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As always, keep in mind that there's risk involved with each trade that you take. No one trade is guaranteed to profit, so you want to manage risk in a way that makes sense for your risk tolerance and your profit goals. And also keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. And we'll see the risk management side of things is made pretty easy actually with our web trader and our mobile app within the order window. It does some calculating for you in that regard before you ever place your trade. So if we find some trades to simulate during the session, we'll go through how that works within the order window. Now, if you want to trade on our app, it has the same functionalities as our web trader with the free signals, the market news coming in, etc. And you can trade both MT4 and MT5 accounts from both our web trader and app. Now, if you log in here in the upper right corner, we'll be in the web trader. And, I know our focus is technical analysis here, but it always makes sense to do at least a brief overview of the fundamental news situation. There's been a bit of fear on the markets today, kind of leading up to, especially out of the US markets, the FOMC minutes being released in the US. That's the committee that kind of decides monetary policy and discusses what they think the proper steps might be moving forward. We already know with the last rate decision and the statement that was made along with that rate decision out of the US, which wasn't that long ago. So we already kind of know what they're thinking. And I think anticipation of that has kind of dragged on the market a bit as the FOMC minutes are due to be released in just an hour or so's time. So we'll finish this session in time for you to pay attention to that as it occurs and potentially trade post announcement after those minutes are released. I suspect a lot of the fear type movement that's been occurring will probably subside. We'll see. What we can do is look for some potential entry points now with some of the movement that's occurred. I know I saw some of the equities pulling down, maybe a push into gold with anticipation of what those minutes might show. So we'll look at some charts and keep in mind that some of the announcements today also out of the US, European Union, etc., maybe showed a bit of a slowdown economically as well. And so that maybe is feeding into some recession fears, that sort of thing. But nothing major really on the news front that really should necessarily make you think there's going to be a huge sell-off or something like that. Anything's possible, but there's no huge breaking news in that regard as of yet. So as then we turn our attention to the technical analysis side of things, then we can start with something that's been moving quite a bit today. We'll take a look at gold. We can look at the signal that's out on it. It's a buy signal coming in on the latest signal for gold, and it looks like the climb is expected maybe to continue here. It looked like it had reached some resistance, so we'll take a look at the larger chart. But the live movement shows still an uptrend and that it has not reached the take profit zone up here, which are these green lines. And these green lines are drawn, and we can look on a larger chart because there's resistance from the past, and you see it's labeled resistance. So on a short-term move, the expectation is that maybe this will rise and pause as it reaches these resistance levels for a short-term type take profit, if indeed it did rise. The pivot line's down here at 26.54, meaning if it does reverse the other way and drops below this pivot line, the idea is then something changed fundamentally. Maybe those FOMC minutes come out. If this movement does break below the pivot line, then the expectation is there must be something that happened that would cause further dropping towards the take profit suggestions then on the sell side of this signal. So the buy scenario is the dominant strategy here. That's the active signal. The sell scenario only kicks in if this movement drops below the pivot line. Okay, so a lot of times the way traders will use this, if the fundamental news aligns with the original signal, you might do a market buy in this case, with your stop loss below the pivot level. And if it does break below the pivot and hit your stop loss, you could have a pending order down here as well, preemptively, so that if it breaks below and hits the stop loss on the buy, it would trigger your sell with this sell scenario that they show within the signal. Okay, and take profits would be on the sell side, these levels here, and on the buy side, these levels up here for the shorter term type move. Okay, let's look at the larger chart. I think it'll be interesting to see what's happening. I see there's a resistance level I had drawn, must have been last week or earlier this week, that just got broke. Okay, it's above this resistance level. And by resistance, I mean it's a price that it hit previously and pushed back down. This is going into last Friday. Okay, it tested this price level around 26.66 or so and pushed back down. Now we see the buy signal is in the money right now, and it broke through this resistance level. Many times after breaking a resistance, you see a surge up, which it did, and now there's a little bit of a pullback. Fundamentally speaking, do the fundamentals agree with this move? It does make sense if you anticipate fear on the markets. Gold is a safe haven asset a lot of times that people rush into when there's fear. So as the equities have been selling off today, I'm not surprised to see gold a bit bullish. At the same time, those FOMC minutes, if they speak of further rate cuts anticipated this year moving forward, obviously with caution, they're going to probably allude to the fact they'll look at the data, they'll look at the economic numbers coming in. But I think there's anticipation that there could be further rate cuts this year. That type of talk could weaken the USD and further strengthen an asset like gold against it. Now, if the FOMC minutes show the opposite, if they show concern about inflation coming back and that they'll be very cautious with any further rate cuts, you could see the USD strengthen and pull gold back down. Okay, so we don't know for sure what those minutes will show. I think there's anticipation of what it will show, and that's why gold is rising right now. So let's then take a look. If we're going to look at this old resistance level, resistance, drop, resistance again here, drop, and now it broke through. So many times in technical analysis theory, once the resistance level gets broken, it becomes a support level, meaning it'll have trouble dropping back below unless there's new information. Now, those minutes could be the new information. So if you're buying on this uptrend now, or with this signal, then your stop loss maybe should be back below this, what should be a support level now, or lower, okay? So let's look at the bigger picture now. If we go to 1-day candles, for example, we're above this resistance level that I drew. You see this resistance wasn't just this week and last week. You go back, it's here as well. That was an important price level at many spots in the past over here as well. So resistance, resistance, down. Once it broke through, it went flying up. It acted as support here. Once it broke below, it went flying down. Here, once it went above this price level, it went flying up. Here, once it broke below that price level, it went flying down, acted as resistance here, resistance, and once it went up, it carried, and resistance again here. So it looks again, once it breaks above, will this keep running up like it did here and here, okay? So if you feel like it will, the bigger picture is even stronger case from a technical perspective that it looks like this could repeat what it did here and here once it broke above this price level. Because it either acted as resistance or a breakthrough that caused a bigger surge. Each time, resistance, resistance, now we have a breakthrough again. Will it repeat these breakthroughs? Okay, so let's say you think it will, but you're concerned maybe that the FOMC announcement could, in the short term, cause this to pull back and hit your stop loss. Let's say you put your stop loss below this support and you're afraid if I just buy on this with a stop loss here, maybe the minutes are released, it pulls back, catches your stop loss, then it continues up with the uptrend and carries on with what happened here and here. Okay, so to avoid getting caught in a temporary pullback, but maybe you think it will rise eventually up towards this resistance level here, which is 27.22, then maybe you take approach of using our special tool, which is AvaProtect. Okay, this is a great tool to use when the technical analysis tells you think in the bigger picture, you're going to get a bigger movement up, but in the short term, maybe the fundamentals tell you this could pull back before it goes up further. And so you're afraid to use a stop loss maybe in that situation because it could get hit before the movement actually goes the way you believe it will go. So because there's an important announcement coming in just an hour or so, maybe AvaProtect makes sense. You could protect this by the day. You could protect this by the hour on some instruments. Right now, we've only got protection 1 day, 2 days. And so we could either protect this to the end of the day tomorrow, end of the trading day, or the middle of the trading day. Sometimes the times vary. Looks like 5 p.m. my time here. And it'll show you your local time that the protection ends. And so for 1 day's protection, it's 2,700. For 2 days protection, it's 3,900. That sounds expensive maybe, but I've got a really large trade here. So I could go down and say, okay, maybe I only want to pay protection as my risk, 1% of my balance, let's say. So that would be around $596. So let's see what trade size will give me that type of risk, that type of cost. So a quarter of a lot is only $283. So I could go maybe 0.9, and I see it's 1,000, 0.7, 0.5. Okay, so half a lot, which is 50 ounces of gold, still huge profit potential, cost me less than 1% of my balance, okay, for the protection for 2 full days. So even if this goes the wrong way after the FOMC minutes are released, even if it goes the wrong way through the night, I don't have to have a stop loss put yet. I'm protected for 2 days, and I have time to be patient and wait and see if it will mimic the movement it did here and here, okay? My take profit I can put up here at 27.22. So let me go ahead and program a take profit, 27.22. Okay, my potential profit is over 2650, over 2600. It's moving as the market moves. So over 2600 potential profit, 2640 or so right now, costs 566, and I can wait 2 days for that to happen. If I'm right, even a third of the time on a trade like this, and I can be patient for 2 days and wait it out, risk-free beyond the cost of the protection, I can profit even with 33% accuracy on a move like this. And maybe I could be right 50% of the time with 2 days protection to wait it out. So I'm gonna go ahead and make this move. Okay, I'm protected for 2 days, all the way until the expiration time. And if I come over here to the open trade and click on the info, it'll show me when does my protection end. It's counting down by the hour, by the minute. I have 45 hours and 45 minutes remaining of protection. As it nears the end of my protection, I want to reevaluate the trade. If it's still running, if it hasn't hit my take profit, then I can reevaluate, and maybe I want to add a stop loss as that protection ends. If it's in the negative, any negative floating gets added back to my balance from the protection when the protection ends, or when the trade closes. If it, if you get stopped out or something, if you were maybe overexposing on the trade and you get stopped out in one way or another, then the protection adds any negative loss from that trade back. You'll only be down the cost of the protection and any swaps from overnight, which should be minimal for 2 days protection. So you've got all the information here. You know exactly when the protection expires, when you might want to manage the risk in another way. And until then, you can sit risk-free now through the FOMC announcement or whatever else is going on for the next couple of days until that expiry comes on your protection. And perhaps you decide to close it early. Maybe it's 3/4 of the way to your take profit and you know your protection's about to end. Maybe you close half the trade, move your stop loss up to your entry price, etc. There's a lot you can do with the risk management at that point. But until that protection ends from AvaProtect, you're free and clear here. And the technical analysis on this looks great because it just broke through this resistance on the one-day candles. And look what happened each time it did that before. It eventually rose up quite a bit towards 27.22. Those two examples here that broke through. Okay. Any questions before I move on to another example from anybody regarding how AvaProtect works or the technical strategy that we used here? I'll pause for a minute. Okay, and if I see any questions pop up, I'll address them as I see them come into the chat box. Okay, so what else can we look at? You know, something like the US 500 could make sense. You know, I know it's a US index, but you know, the US 500 has companies that are global. They have global reach, many of the companies. So, you know, what goes on around the world really can affect it. Not just what happens in the US. So many times I like to look at the US 500. It's an index with a large number of companies to diversify it. So it kind of you know, levels out the movement and maybe makes it a bit more predictable than a company with a lower number, or I'm sorry, than an index with a lower number of companies. Okay, so we do have a signal that's live on the US 500, a technical signal. It's a sell. And we do see it's been downtrending. We talked about that leading up to it, the FOMC minutes release, that it's been downtrending. Boy, it looks like it really wants to reach the take profit zone down here. This has been a solid signal. If we expand the chart here, and let me just get rid of some of these lines that are clouding things up from prior sessions. And so what we see here on the one-day candles is certainly a downtrend for the last couple days. And so we see that, if I can get rid of these last couple lines, we see that here, 1-2 days of dropping. Okay, so you know, eventually what goes down when it comes to major indices typically tends to go back up eventually. It depends, you know, when is that fear going to end? You know, we see this downtrend reaching an area of support, which is why this is labeled support in the signal. And this is where our live signals can many times help you, even if they've carried out to the predicted direction already, to the support level, and maybe you don't want to sell on the signal because almost already to the take profit support level, but it can help you out with your technical analysis because now you can identify where Trading Central has said they find support in the past, so 59.24. So if I want to use that for my technical analysis, 59.24 is right about here, okay? And we can see on the chart why they chose that as a take profit zone. We see that the candles reaching of the 2-hour candles, this area and bouncing. This was into last week, once, twice, 3 times, 4 times, 5 times, bouncing back up. Once it broke through and then plunged, which tends to happen with support levels. So if you had a pending order below the support, once it broke, if you triggered your sell, you've got a profit. Excuse me. And then once it came back up, it was resistance. And then once it made its way back above, it became support, support, support again, and then went right back up like it did the last few times back here. Okay, so hit and went up, hit and went up, broke it once, but once it got back above, it hit and went up again. So again, testing this week and today, test, back up, test, back up, test it again here, bounced up again, and now it here is trying to push down again to test it one more time. Okay, makes sense that it's continuing this trend until those FOMC minutes are released. It's possible those minutes could cause it to break this support and plunge further. So if you were buying on this right now against the signal, you might have your stop loss below this support level, and if it breaks it, you're out with a short loss, okay? Or the opposite, if you're going with this signal, you might be looking to take profit somewhere down near this support, which it's very close to that support now. You know, we're at 59.40, the support is 59.24, which is the beginning of the take profit zone. And, you know, you see lower support down here, which is why they're saying 59.02, something like that. It could be a spot to take profit as well. It gets you below these wicks and closer to this area here that bounced back up. So they're showing take profit somewhere down here. It looks like it could even be down to here, okay? If it breaks this support level, could test this level down here on 58.77 even, based on this drop here, okay? So a couple things you could do here if you don't like the entry point right now, you're not convinced it'll break the support level. One would be to put a pending order below this support right here. If it breaks this support, you could have a pending order right here to sell. Okay, a sell pending order below the support here. How would that look? You'd set this up saying, okay, if I'd have looked at this earlier, I would have sold with the signal and ready to be weighing the money. I'm late getting in, so I will only sell if it breaks the support level, confirming a further downtrend. So if that's your strategy, then I'm looking at take profit down near the lower support, 58.77 perhaps. And stop loss then would be if it breaks the support and I enter here, I'm expecting it to plunge down to the next support level like it did before. So my stop loss would only need to be back above the broken support somewhere up here. Okay, maybe 59.36, right where it is now. Okay, so stop loss could be 59.36, 38, something like that. So my potential profit would be over 8,700. My risk is only about 450. Okay, because I'm doing an opportunistic entry that if it breaks the support, I'm in with a short stop loss, but my take profit is down quite a bit further to 58.77. Okay, so this is within my 1% risk if I wanted to do that with this type of setup. Okay, and actually this is a market move. This is if I did it right now. I take that back. If I did a market sell right now, I would need to get my stop loss higher than that. Okay, that's a bit too close, but let's execute when price hits 59.19. Apologies. To make it a pending order, we need to put execute when price hits. Now I'm saying take profit 58.77 and stop loss back above this broken support should it break down there at 59.38. Okay. And so then we see not as nice of a ratio, but still nice because we're doing a technical breakthrough with a shorter stop and a longer take profit. Not as nice as if we sold right now. If we sold right now with that same stop loss, it was 10 times less risk, but a much shorter stop. So we could get hit pretty quick, right? But waiting for it to break the support level from a technical perspective makes sense to confirm the downtrend. And so we get a better than 2-to-1 ratio, potential profit to risk, even with selling from a lower point by putting our stop loss then back above and our take profit before the support down here, 58.77, I should say. Okay, down here at the support level. And maybe I cheat that up a little bit to be just above that support level and say 58.80. Okay, so take profit is right about there. This first line just above the support level. And I'm looking at about 2-to-1 ratio now, potential profit to risk. Now I just need to adjust my trade size to be the amount of risk I'm comfortable with. So 0.25, I would be risking less than 1% to make more than 1%. So 0.4, I'm risking a little more than 1% to make 1560, 0.35, 1% being about 590. I'm looking at my balance, so 1% is about 590. So I'm just trying to cheat this trade size down until I'm risking the amount I'm comfortable with. And now I see I'm risking almost exactly 1% of my balance with a trade size of 0.31 to go after a little better than 2% profit. Okay, and I'm saying 1%. You can risk the amount you want of your equity, of your balance. I'm just giving an example of a 1% risk, but you see how easy it is to calculate the amount you're risking and what your potential profit is before you set that up. So now this is set up as a pending order. So when we look over here, we see orders. Okay, that's a pending order. That's the pending order we just set. If it hits our entry price down here, then it will sell. We're waiting to see if there's a breakthrough. And if there is, then maybe the FOMC minutes went our way and this continues down like it did the last time it broke through right here. Okay, so in one circumstance with the gold trade, we're kind of banking on the momentum continuing in the upward movement, even against a strengthening US dollar. In this circumstance, the opposite, we're banking on this to continue with a downward trend with a strengthening US dollar pulling it down. So we're kind of hedging ourselves a bit, because if the US dollar weakens drastically, gold would rise easier and we'd be easier to win on that trade. But if gold strengthens, it'd be easier for us to win on the US 500 dropping then, even if we're then maybe going to lose on the gold trade. Remember, on each of these trades, we're risking a lot less than the potential profit. So if we can win even on one of these trades, we're in overall profit if we're 50-50 there, okay? And remember, on the gold, we've got 2 days to wait it out. So we've diversified our risk management between these two trades, as well as our directionality. But the technical analysis plan makes sense. It's opportunistic on both trades. We're in the direction of the trend on both trades. And in this case, we're waiting for a technical confirmation of a broken support before entering this trade. So we've diversified. One is a market move with the current momentum, and the next is a pending order waiting for more momentum for confirmation before entering, okay? Let me take a look. I see maybe some questions have popped up. Kareem, good question. The question is, how often do you use buy stop or sell stop pending orders, or even any pending order, buy limit or sell limit? If you're not familiar with those names, when you're using the MetaTrader platform and app directly rather than our platform, it can be a bit confusing because you have to understand what those terms mean. When you're in the order window on our platform, it's trading for you on your MT4 and MT5 accounts. You'll see the trades there as well. But when you're doing the pending orders, you don't see those choices because the platform is smart enough to make it the correct type of pending order for you. This example that I showed, that it's going to sell from a lower point, that's called a sell stop. If you're selling from a higher point, if you're waiting for it to go up and telling it to sell when it reaches there, that's a sell limit, okay? Buy stop and buy limit are the same idea, but in the opposite direction. So the question that's being asked is about pending orders and how often might I use different types. I love buy stop and sell stop pending orders, meaning the type that you're waiting for confirmation of a movement in the same direction that you plan to trade. So in this case, when you're using a sell stop pending order, meaning waiting for it to drop to a lower point before you sell, especially before maybe big economic news that might come out, what you're trying to do in that circumstance is trade in the direction of the trend, of the momentum. Even though you're giving up entry point, I'm actually waiting for a worse entry point before I enter. I'm waiting to sell from a lower point. But the benefit of that is confirmation of momentum, okay? And so how often do I use that personally? Probably as often as I use market moves. And I don't mean just the sell stop, but pending orders in general, I use as often as I do market moves, maybe in more context to shorter term trading, because those technical moves and breakthroughs like we're waiting for right here tend to have momentum, but you see it doesn't last a long time necessarily. It broke through and dropped, but once it hit the next support level, up it went. Because it's a technical trade, many times the momentum dies at the next technical level, okay? And then the longer move maybe it takes some time to come to fruition. So my longer term moves, I tend maybe not to use the pending orders, and they tend to be based on larger economic fundamental news, and I'm a bit more less selective with the entry point. I don't need an exact point like I would maybe with a pending order, okay? And pending orders pretty much are all about getting the price you want, because by definition, you're putting the pending order at an exact price that you want to enter. Okay, and so those tend to be about precision more. And many times with that type of precision, it's because it's a shorter term trade. And a longer term move, you tend to care less about an exact entry point. And so you tend not to use pending orders necessarily as often, at least myself, for longer term moves. Okay, very good question. And you know, my tendencies don't have to be yours, but that's my tendency with pending orders. Okay, I see a question about the S&P 500. Okay, so the question is about the US 500 and how does that relate to the strength of the US dollar? You know, the US 500, all of the US indices are paired against the US dollar. So if the US dollar is strengthening, that tends to pull on those indices, on the stocks that are paired against the US dollar. So there's a natural tendency that if the USD has some type of rapid strengthening, that the equities, the stocks, tend to get pulled down by that. And in general, when traders are selling US stocks in particular, you know, the margin currency is USD, so that they're buying then into the US dollar. By selling my Tesla stock or my Google stock, that means I'm buying the US dollar as I sell that stock. So that tends to have a strengthening effect in and of itself as stocks sell and people then are buying into the currency that it's paired against, even temporarily before they buy back in maybe to another stock. That can have a strengthening effect on the US dollar as well. So for multiple reasons, as the US dollar strengthens in general, that tends to create bearish pressure on US stocks. And you might say the same for European indices that are paired against the euro, or any country's index or indices that are paired against the local currency, okay? So yeah, a lot of times we see as the US dollar strengthens, it is a safe haven currency somewhat, the US dollar. When there's fear on the markets, the US dollar strengthens in general many times. And as stocks sell also, the US dollar tends to strengthen. That's a good question. And we do see that correlation many times. It's not one-to-one. There are days where the US dollar is strengthening and the stock market's rising. It happens. But you know, in general, fearful days, when the volatility is high and the US dollar is strengthening, more times than not, I tend to see the US indices pulling down as well. Let me see, I'm looking for maybe some more questions, and it's nice to see we have some active participants in this session because there are a lot of questions popping up. Okay, yes, Kareem, you were just confirming something we talked about. All right, so, you know, I think this is a good place to stop. We've gone through a couple examples of technical strategies, one being going with a market move with gold, with the current buy technical signal that came in from Trading Central, with the idea that there's some fundamental reason maybe why to buy as well, and also seeing that gold had already broken through the resistance level. So we went with that buy with a market move, but protected it because of the big announcement coming up out of the US. We protected it with AvaProtect. Now, the other strategy was with the US 500, also going with the direction of the momentum right now, but waiting for confirmation of that support level to break through because it hasn't broken through the resistance yet, or I mean the support yet, and gold had already broken through the resistance. So in the case of gold, the market move maybe made more sense from a technical perspective, the US 500, given that it's still testing this support level but hasn't broken it, we're waiting to see if it will break through. And it looks like it did, actually. It triggered our trade on the US 500. Okay, so now we're live on a sell with the US 500 because it indeed broke that support level. So a couple different strategies. Now the US 500 is in with a short stop loss. We could get knocked out with the FOMC minutes being released because they haven't been released yet. But gold, that won't happen to us because we've got AvaProtect with 2 days protection. So you can see the advantage of diversifying your risk management as well with AvaProtect with those 2 trades that are live right now. All right, everybody, thank you for joining. And thank you for the participation, the good questions as well. Good luck with your trading. If you're going to trade with those minutes coming out with the FOMC minutes, I think we'll see some big movements, maybe some momentum that carries with some of the charts we looked at. We'll see. Good luck with your trading if you do trade on that. I'll be back at it with another session tomorrow that focuses more dominantly on the fundamental news side of things at 11 a.m. UK time tomorrow. All right, everybody, bye for now. Take care.